Traders Empires, BW. So today, on today's lesson, we'll be talking about technical analysis. Um, Actually, there are three ways of which we can analyze the market, um, which is technical analysis, fundamental analysis, of which we look at the news events or any news reports that may contribute to the movement of the market, that may cause the market to move in a certain way or a certain direction or behave in a certain way. And then we also have sentimental analysis, which is studying like how many people are actually holding on to a certain position, if it's like how many people are selling a certain asset and how many people are buying it at the same time. So we'll talk more about the other two that I mentioned as time goes. But as for now, we are going to focus more on the on the technical side of the market. So technical analysis, what is it, man? What do we mean when we say technical analysis? According to my understanding, it's studying the price movement, looking at the fluctuation of price based on certain rules such as maybe support and resistance, be it trend lines, just studying the bear chart as it is, of like trying to speculate where the next price is going to go, and looking at these rules that we have set for ourselves, and looking at the bear chart as it is right now. So for now, we are going to start with the technical part. I usually start analyzing the market from a bigger time frame because I myself, I'm a breakout trader. I trade breakouts. I trade according to the trend that is persisting within. I trade within. I trade with the trend that is existing at the time. So it makes a whole lot of things easier. It makes my risk management, easier for me. So I get to actually risk less when I'm using the strategy. When I'm actually trading with the trend, and also using this same kind of approach towards the charts. So let's start, guys. I usually use I use trend lines to make sure that they guide me throughout the entire trend until it's invalidated. So I usually start from a higher time frame so that I may know which trend are we in. Are we in a uptrend? Are we in a downtrend? Or is the market moving sideways? Sideways, I'm talking about maybe something like this, a fair exchange of price where, price is just moving as any actual trend that we can use to take our trades. So we're gonna go first to a daily time frame because I want to actually capture the persistent trend right now. So as we can see, guys, the market has been in an uptrend. The market has been going up for some time, until it broke this uptrend. So I usually use a channel, a channel that helps me, get to know where the market is most likely to make a U-turn. So this channel, in order for me to put it up, is based on how many touches I have in that particular trend. So if we were in an uptrend in this case scenario, so we broke this trend line. Now it means we broke this channel and this trend line below, which means now there's a change of direction. So this whole channel acts as my dynamic support and resistance. Inside of these trends, inside of these channels, we also have other trends as well. Not trends, but other market. What can I call it? We also have other structures inside of these structures that we have. If it's an uptrend like this, we obviously have other structures building inside of this structure that we are looking at from a bigger time frame, because in this instance we are using a daily time frame. So we're going to focus right now on the persistent trend that is going on. This whole trend line, this whole channel was just showing us that we are no longer in that uptrend. Now the market has changed its direction. Now we are on a downtrend. So on this downtrend, we're gonna have to like find our perfect entries in this particular downtrend. So we're gonna have to make sure that we try to zoom in a little bit. We are not gonna need the previous trend, because we already know that the market has broken that trend and it has retested that trend, which means right now the market has taken a different direction. So right now we're gonna try to start from here and draw our trend line. So in this particular trend line, we have our touches. So these touches are going to determine whether we're gonna buy or sell at these touches. So as I was saying earlier on, we usually trade with the trend, with the persistent trend, which means in this case scenario we'll be looking for what? Sell opportunities, because the market is in a constant, downtrend. So I drew this whole channel looking at how many touches we have. We haven't yet broken above or below this trend line, so we're gonna try to, excuse me for that, we're gonna try to zoom in into H4 now that we have our persistent trend here, which is a downtrend now. So in this downtrend, we're gonna have to like look for buy or sell opportunities. But in this instance, we're gonna look for these sell opportunities, right? So you only buy when you know what you are doing. But as for beginners, don't try to go against the trend. So yeah, guys, now we have this. So as we have this trend, we're gonna have to try to make sure that we draw our zones. These zones are zones that act as our previous market structures. Where we know that the market is most likely to react when it gets to that particular zone. So yeah, I had to pause this video a bit. So yeah, now that we're back again, guys. So we're gonna have to try to make sure that we draw all these zones that we know that the market is most likely to react when it gets there. So as you can see here, we had the zone and it has been broken, and so these zones basically help us predict where the market is most likely to react. Like taking for instance, we have this area which was acting as our current supply area, and this was our demand zone. So we knew for sure that the market, when it gets here, because it once reacted to this, when it gets here, it's most likely to react again. So until it broke the zone, now the zone acts as our supply area. Now we're gonna have to like try to take this one again, try to copy it, yeah, something like that, exactly. And then I'm gonna have to take this one again, and I'm trying to copy this. Hold on a second. Yeah, exactly. So the way it is right now, we have our zones, we have our trend lines. Now the only thing that we have to do is wait. Patience is king when it comes to the forex market. We're gonna have to wait for the market to come back to our key areas. So we're basically gonna have to wait for the market to get back to our key areas. So the points that I have marked out here are our key areas, because in a downtrend like this, the market moves in these kind of ways. We have higher lows and lower highs. All right, so as it keeps on moving in these waves, it creates
all these supply and demand zones. So once a demand zone has been broken in a downtrend, it now becomes our supply zone. So right now, we haven't yet broken below this demand zone. So it still acts as our persistent demand zone for now until it's broken. And the same applies on this one as well. What happens is that we are waiting for the market to go back maybe to a key area, to go back to that key area, and then continue with the very same movement, going further down. Continuing with the same movement, going further down, and still creating these higher highs and these lower highs and lower lows, just like that. So we'll keep on drawing all these until the market, behaves in a certain price. We don't predict where the market is going to go. We wait for confirmations to take place. These confirmations are the ones that are telling us whether to take a trade or whether not to take a trade, or whether the market is reversing or whether it's still going according to the same trend that we saw or that we identified on a higher time frame. So right now, now that we are on an H4 time frame, we're going to have to scale in to a smaller time frame. Let me check out something real quick. What happened to our trend line now? All right, let me sort this out real quick and then get back to. Get back to this. I think it has to display everything. Why is it not displaying this on the H1 time frame? Okay. All right. Let me try to sort this thing out real quick. Yes. Yeah. I wanted to make sure that this trend line is visible on a H1 time frame as well, because we are following the same trend that we saw on a higher time frame. So I think I mentioned something like, these trends, like inside of each and every trend that we see, there's a market structure, there are patterns inside of these patterns that we identified on a higher time frame. So like in this instance, we had this movement inside of the persistent trade. So it was more like an uptrend inside of a downtrend. So as for us who are breakout traders, we wait for the market to break this point of interest here and also react to this previous market structure. This is the confirmation that I'm talking about. So as for me and my team, what we do is that a trader's empire, we wait for a break and close below or above a point of interest. In this instance, we are in a downtrend and we were in a temporary uptrend that was paving way for our continuation of the downtrend. So now we broke this trend line with so much momentum, and it tells us that our sell has been has been validated. Now this is when we can take a trade from this point, knowing that the market has broken below our point of interest. Our point of interest right now is this previous market structure, is this supply zone, and then the other one is this channel. In this instance, we take a trade from here, and then we place our stop loss probably above the market structure. This is a less riskier area, like this, a less risky area to place your stop loss in a trade like this. And then this one, it's like when you take a loss, it will be a small loss, but then it's more risky putting your stop loss here because the market may try to reverse a little bit and then take out all these stop losses that are around this area and then continue with the persistent trend. So yeah, the same thing that we have identified here. this continuation, this pattern inside of this whole this pattern inside of this whole downtrend. It is there everywhere because it's a continuation pattern. We could do something like this. It's also a continuation pattern. We could also count it in. Excuse me for that. I just wanted to take this thing and copy it. It's also a downtrend. So yeah. Hello. Sorry about that. I had to pause this video a bit because I was on a phone call. But anyway, these trends. Let me get rid of this so that our chat doesn't confuse us that much. These continuation patterns are always there everywhere. So, like in this instance, we had this as a continuation pattern. It was paving way for this trend to also take place. But inside of this pattern as well, there are a whole lot of patterns that presented themselves. As you can see, I took trades based on this particular setup only, not based on the entire movement. It's so unfortunate that I wasn't around when this movement took place because it was such a clear movement, but let's just try to zoom in a little bit and see what we could have done in this trade. So breaking this down into a smaller time frame now, we had this movement. We are trying to simplify this whole forex thing and not make it that complicated. You understand? Inside of these two zones, there were other zones as well, that we cannot dispute and say, no, this zone doesn't exist. Because, for instance, we'll take this as an example. Because when I took this trade right here, I was looking at this zone right here, these two zones. These were my immediate zones, besides this one, but I had an immediate zone that I could, make sure that I count on as well. So within this whole setup, I had something of this nature as a continuation pattern, because I told you guys that if it's in a downturn, if you're in a downtrend, we make sure that we look for sell opportunities. So we had this whole entire movement there. So this movement, I was waiting for this breakout. So this breakout took place. Let's go back to it. What the hell is that movement again? Yes, within this movement, within this trend, we had a breakout. We had a breakout and then a close below this market structure. So that is the reason why we had to take this trade from here until there. We may say I was using fundamentals as well, but there's another issue for another day. We're gonna look more into fundamentals on our next topic. So for now, I just wanted to show you guys how we analyze at Traders Empire, because all these movements repeat themselves in the market. It's just a repetition of these same old movements every day and out, every year and out. It's the same movements. You just make sure that you look for a break and close below a point of interest in favor of the persistent trend. So that is the most important thing that you gotta know is when you analyze, start from a bigger time frame to catch, just to know the trend that is there, that is existing, and then try to zoom in a little bit and try to see where you can take a trade based on the major trend that has taken place. If it's a downtrend like in this instance, then make sure that you look for sell. If it's a downtrend like this, just make sure that you look for sell opportunities. Just when you zoom in, you make sure you mark all your zones that seem to be, that the market seems to be reacting to. From there, you make sure that you draw your patterns, and then in your patterns, just make sure that you wait for a close below or above your market structure, and then that's when you can take a trade. Thank you so much. See you on another video. Yeah, thank you guys. Thank you for your time.